Today, market participants are looking forward to the US NONFARM payrolls, and this information will be the key factor that will determine the size of the first rate cut in the US on Wednesday next week. Recession fears wind down the US dollar since the previous report in early August. Will the fears resurface today? Well, September confirms the dismal reputation as the worst month of the year for stock indexes. Investors will find the answer very soon. Interestingly, U.S. authorities define the situation as optimistic. For example, U.S. Treasury Secretary Janet Yellen said the day before that the country has a healthy economy and a labor market. Fed Reserve Bank of San Francisco President Mary Daly delivered the same message earlier this week. She believes that the regulators should cut interest rates to support the health of the labor market. The Beige Book, which provides a state-by-state overview of the economy, notes some signs of a slowdown in the labor market. And while U.S. employment remains generally stable, it's still too early to talk about a recession. Jerome Powell said that further weakening in the labor market is undesirable for the regulator. Sluggish hiring is exactly what's happening. If data and open vacancies only hinted at the likelihood of a sluggish hiring, the ADP employment report no longer left any doubt about this. In August, hiring in private businesses increased by only 99,000, and this is way too low. If we take into account the size of the US population, its age composition, and its growth rate, employment should grow by about 250,000 per month. The private sector created fewer than 100,000 jobs. It's not surprising that the labor market health is gradually deteriorating. And this negative report for the US dollar did not push the US dollar steeply down. There are only a few hours left before the release of today's market catalyst, so investors want to play safe. Hence, the US dollar is trading quietly ahead of the US NONFARM payrolls. The US dollar index traded lower within a corridor of 100.80 to 101.10 in the first half of Friday. By the way, if we ignore the inevitable burst in volatility in which the greenback can jump dramatically at the moment, the US dollar still doesn't have much chance of strengthening. However, the forecast for the NONFARM payrolls for August is still higher than in the previous months. The number of new jobs in the US public and private sectors is expected to increase from 114,000 in July to 116,000. However, after yesterday's data, it's difficult to believe in such a jump. Moreover, over the past 4 months, only 617,000 jobs were created outside of agriculture, and this number should be 250,000 per month to maintain the stability of the labor market. That's the current figures for labor market growth currently look to be almost half of what's needed. Our analysts predict that the NONFARM payrolls for August will be about 120,000, and in this case, the US dollar will actively lose its position. The Eurobulls are already anticipating further growth of the euro-dollar pair, at least today. The single currency has already completed the recent correctional cycle and has begun recovery against the US dollar. And support remains the upper border of the same psychological area of 1.1000 to 1.1050, which we talked about yesterday. Traders added more long positions at the upper border. If the currency pair continues to rise, this could lead to a complete recovery of the euro, with its price reaching the target bullish level of 1.1200. And this rise in turn will be able to summon the uptrend in the medium term. At the same time, technical analysis of the euro-dollar pair may be of secondary importance today. As soon as the report from the US Department of Labor is published, the market will be guided by red-hot statistics when making trading decisions. The non-farm payrolls include wage inflation, unemployment rates, and other metrics. No doubt that the US non-farm payrolls will also stir up the oil market. Perhaps that's why the Brent price is hovering around $73 per barrel today. At the same time, oil prices are guided by other factors. For example, a decline in the United States crude oil reserves by another 6.9 million barrels last week is a signal for an increase in oil prices. Yesterday, OPEC and its allies made a statement about postponing the planned increase in oil output rates from September to October or even November. At the same time, the fall in the global demand for commodities, especially in China, is pushing oil prices downward. All in all, these two opposite impulses mutually offset each other. At the same time, they obscure technical indicators and complicate trading decisions. So the market is now under speculative pressure that seems to be out of control. Despite oversold signals, speculators continue to focus on market inertia. If the Brent price settles below $72.30 per barrel, this could reinforce the peer's position and lead to a fall in the area of $70 per barrel. At the end of the first week of September, the Russian ruble is trading in a corridor from 88 to 90 versus the US dollar. If oil prices begin to recover, the ruble will be able to gain a foothold at this level. Otherwise, we expect the dollar-ruble pair to shift to a higher corridor between 90 and 92 next week. How is trading going to unfold in the short term? We will definitely tell you in our next video reviews. Don't miss them and stay up to date with the latest market news. Subscribe to our channel. We wish you profitable trading and have a nice weekend. See you! NONFARM payrolls is like launching a new quest. To pass it, you need to see key trends and avoid financial traps.